Something just happened with Ithala that I think every South African interested in banking, governance, and financial inclusion should be watching. The Prudential Authority of South Africa has withdrawn its liquidation application against Ithala after government arranged the repayment of its depositors. Now let's be clear, this does not necessarily mean Ithala's problems have disappeared. There were seriously regulatory, governance, and financial weakness. In fact, Ithala never had a banking license, and the regulators had concerns about its ability to protect depositors. But here is where things get interesting. Instead of allowing depositors lose access to their money, National Treasury committed 2.2 billion rand to repay Ithala depositors. By June of 2026, more than 1.7 billion rand had already been paid to Ithala depositors. That's significant because South Africa has historically struggled with government-backed institutions delivering sustainable financial services. But we are now seeing government trying to build and rescue institutions sitting outside of the traditional big bank model. Look at Postbank. Postbank in 2026 received its financial service provider license as government works towards creating a sustainable state-owned retail bank aimed at expanding financial inclusion and sustainable financial services. And this matters because South Africa's banking sector remains highly concentrated. South African Reserve Bank itself acknowledges that few large banks dominate the system, while financial inclusion is still more about just having a bank account. So, could government-backed institutions become a genuine competitive force? But, and this is a warning, ownership is not the same as competence. The real test is whether this institution can combine public purpose with private sector level governance, technology, risk management, and accountability. But if they can, South Africa's banking landscape could look very different in the next decade. And that is why I'm watching this space very closely.